Hello, I'm David Mandy, President of OlM Partners. I want to welcome everyone today to the Bonterra Resources Town Hall call. Bonterra trades under the symbols BTR on the TSX Venture, and they also have a OTC listing under the symbol BONXF. We've got a nice group of investors here, both professional as well as generalists and non-professional investors. Many are here, and I appreciate you for being here. We caught your interest through the short videos of ours, these 6-minute CEOs. Appreciate you being here. But now that you've been briefed, we can go deeper into the fundamentals of what makes Bonterra story so compelling. We have a large group of money managers and analysts on the call, many of whom will have questions that you may not thought of asking. In the spirit of the 6-minute CEO, in the spirit of brevity, in the spirit of transcending the standardization of the presentations by Zoom, we're going to keep this to about 20 minutes so we can turn to the Q&A. If we need extra time for questions, management has agreed to stick around to help answer them. So now let's get down to business. Very pleased to introduce our host, Pascal Hamelin, who's the President and Chief Executive Officer of Bonterra. Pascal is a veteran. He's been in the business for 30 years, over 30 years, trains as an engineer, trained as a mining engineer. He's been involved in operations, project management, mainly acquired in the Sudbury and Abitibi camps. Mr. Hamelin holds, as I said, a mining engineering degree, and he's also in Quebec, member of their Society of Professional Engineers in Ontario, excuse me. Given a quick thumbnail of Pascal's history, in 2010, he joined Metanor Resources as the general manager of the Bachelor Mine and moved up to VP of Operations. Following the acquisition of Metanor by Bonterra, he became VP of Operations for Bonterra. In July 2020, he was nominated by the board as interim CEO. And in November 2020, Pascal became President and Chief Executive Officer. It's an absolute pleasure to turn the call over to Pascal.
Thank you, David. Nice to be with everyone this afternoon. Thank you for taking your time to spend a few minutes with me. Like David mentioned, I'll stick the presentation to 20 minutes and then to allow enough time for Q&A. Therefore, I'll share my screen so you can see the corporate presentation. There will be some forward-looking statement in this presentation. And all amounts are in Canadian dollars unless stated otherwise. The summary, who's Bonterra? 3 things to remember. We're in Quebec. We've got excellent resource that was just released 2 weeks ago, over 3 million ounces total. We have assets, and we're rapidly advancing our asset through drilling and a PEA. Right now, our value, significant discount to our peers in the industry. With over 3 million ounces, the enterprise value is around $36 an ounce, so significant discount with the average in Canada of close to $100 an ounce. We're in the middle of a permitting process to expand the mill from 800 tons a day to 2,400 tons a day. That mill is 100% owned by Bonterra. It's in the middle of our exploration camp. So like I mentioned, if you look at the industry, the average is over $100 an ounce, and presently we're at 36 with the resource that we just released. So it's to me, it's a right time to pay attention to Bonterra because I don't think it's going to stay there very long. Our plan, Pretty basic, but this is the root of growing a company. You expend your resource, so that's what we're doing. We're drilling about 10,000 meters per month on our 3 projects, Gladiator, Barry, and Moroy. The split between Gladiator, Barry, Moroy, you got it there, 4,000 at each of Barry and Gladiator, and about $2,000 in the Moroy camp. We told the market last fall that we were going to do the PEA in Q2. Sorry, not the PEA, the resource estimate in Q2, which we did. We told the market that we're going to drill throughout the winter 63,000 meters. We did. And we told the market last fall, that last summer, that we're going to do the bulk sample at Moroy before year end, and we did. So now you see, you start seeing the trend. So we're telling the market now that we're going to release the PEA in Q4. So we're going to work hard to deliver that. We already started. The mine engineers are doing the mine design as we speak. We have weekly meetings. We picked SLR to do the mine design with the assistance of our mining engineers, and it's going well. And we plan to have that out in Q4. Beyond Q4. What's in the plan? Well, we're going to continue to advance the permit for the mill. The permitting process for the mill is well advanced. I'll go into that later, and also advance the permit for the Gladiator ramp, so we can go underground and do diamond drilling year round. Of course, the typical recommendation from a PEA is to do the feasibility. So most likely, the plan will be in 2022, we'll be following the PEA to do the feasibility study. Right now, the drilling is we're doing expansion drilling until the end of the PEA, and then after that in 2022, we're going to do the infill drilling to support the feasibility study. But right now, it's all expansion drilling at our 3 projects. So the resource just got out 2 weeks ago. A lot of work went into this. We drilled over 130,000 meters between 2019 and 2021. All that new drilling, a lot of it was oriented core drilling, so to validate the orientation of the veins, so the structure, everything. We increased the measure indicated resource as well as the inferred resource on all the projects. So we're going to continue the expansion, and this number is going to keep growing. Now, if you try to compare 2019 with 2021, there's a lot of things that happens in the CIM guidelines, but if you want to try to compare apples with apples, so if you apply the 130,000 meter of drilling since 2019, and you apply 2019 guide numbers, cut-off grade and metal price, we have an increase between the inferred, measured, and indicated over 30%. And then when you apply stope constraint, the removal of the crown pillar, and the addition of the Barry open pit, you get over 40% increase between 2019 and 2021. So very good resource. That resource was done by 2 independent firms. SLR did the bulk of the work, and it was peer reviewed by SGS. So 2 solid firms, good geologists that validated the resource over at our 3 deposit. Capital structure, 100 million shares outstanding right now. Fully diluted, 115 million. We got the cash to execute our plan this summer, which we are doing, and the PEA is going to be this fall. Shareholders, the majority, the largest shareholders are here on your right. Wexford, Kirkland Lake, MN Cap, and Fidelity are the top 4. They're all very supportive of Bonterra and the action plan to execute, to deliver value to the shareholders. Management and board of directors, myself and Mark Ducharme's the local management. Mark has been in the industry for over 30 years as well. He lives here in Val-d'Or, and he's our exploration manager. He knows narrow vein gold deposit very well. He's been at Sigma, he's been at Sacam throughout the province. He was at Kena. He was actually credited for the discovery of Kena Deep. That was in, I believe, in 2015. So solid management team that are present in the field. Caesar, Akiba, and the other directors, they're all very supportive of the plan. And one thing, Mathieu Apijac is one of our directors. He's a businessman, lives here in Val-d'Or, but he's also a representative from the Cree First Nation of Waswanipi. Waswanipi is 30 kilometers from the Bachelor Mill. So he knows the area very well, and the people in the area knows Matthew very well as well. So our land position, as you can see, solid. We're all in the Abitibi Greenstone. The Urban Berry Camp is a very young camp. So we're proud to say that us and our neighbor, Cisco, we pretty well own the camp. So there's a lot of discovery already done. You know, we already have 3 significant projects on there, Windfall, Berry, and Gladiator. And we believe we're going to find more as we drilled. That's why we also have 2,000 meters per month allocated for regional drilling between the Urban Berry Camp and the Bachelor Camp. The Bachelor and Berry and Gladiator, they're all associated with fall within the Greenstone Belt. You need both ingredients to find successful gold deposit, which we have. We're a closer look to our project. The Bachelor Mill's up here in the Bachelor Camp with the Moroy deposit. 110 kilometers south, you got the Berry and the Gladiator deposit. So what you're going to see in the PEA is going to be 3 deposits feeding a central mill. So the capital cost will be lower, and also the production ramp up will be quicker because we're going to feed the material from the 3 deposit to an existing mill. The mill itself is permitted for 800 tons a day presently. We began the permitting process back in late 2017. So we submitted the environmental impact study already to the ministry. We already answered 2 sets of questions from the Ministry of Environment. So we're in the last phase so we're waiting for either the permit or a 3rd series of questions. But the number of questions that we get every time are a lot less. So if we get a third series of questions, I don't expect them to be very long. So the critical path for the project, it's not even permitting. It's the engineering, the mine design, PEA, and feasibility. So how do we look in Canada right now? If you look at Bonterra resources, the enterprise value per ounces, we're around $36 US. If you look at the recent acquisition that happened in the camp, not the camp, but in Canada, single asset, you know, the most recent one was Battle North in June. You're looking at closer to $200 an ounce. So there's a significant gap. So for us, our goal is to get up there. And by doing, how we're going to do that is to, we did the resource, now it's to do the PEA and continue to de-risk the project by getting all the permits. So how does Gladiator compare with other deposits in the Abitibi Greenstone? Very similar, very similar. You look at Lamac Mine and Windfall deposit, very similar ounces per meter drill and ounces per hole drill. There are 3 deposits that are high grade, narrow vein. The difference between ours and the other 2 on your right is the number of drilling in meters done. Gladiator is younger, it's got less drilling done, but our goal with the decline is to get that drilling up And with that, we're going to have additional ounces. So high level geology, right now, like I mentioned, we got 2 drill rigs at Gladiator, 2 at Barry. We have 1 over at Moss, right, presently doing drilling. And this year, where it says Canal, this is the Duke option. So the Duke option is it's a property that Bonterra optioned 3 years ago. The work commitment is completed. So now it's the we're in the we're waiting for the assays for the Duke option, and then that Duke option will be converted into a JV. Gladiator itself, the 2 rigs right now are on the water. They're drilling there since beginning of June. They're drilling southeast of the existing deposit. So we're expanding on along with the plunge. And then this winter, we're going to be back to the north, drilling the north zone. But this summer, we're focusing to the south. This is a section view looking west of the deposit. So on the lake, we're drilling over here, and we're drilling the extension going up from the all these north dipping structure and also the south zone. Barry deposit, we got 2 rigs as well over there. They're drilling the, they're located over here right now, the diamond drill rigs, and they're targeting the expansion at depth of the H15 zone. This is where we're focusing this summer. Eventually, we're going to be back to the against the Messiah fault located north of the Barry deposit. This is going to be more like winter drilling. Now Moroy, we have 1 rig on the ground doing expansion drilling for the Moroy deposit, and also we have 1 drill in the camp presently focusing on the Desmarais target, about a 1.5 kilometer northeast of the Bachelor Mill. So we have 1 diamond drill rig over there, and while we wait for the assay, it's going to drill the sigmoid area, and then when we have the assay back, we're going to go back over at the Desmarais target and continue to drill that target. It looks pretty good, very similar in geology. Physically, you know, what you see is very similar to Bachelor and Moroy. So a lot happened with Bonterra in the last 2 years. We relocated the office from Vancouver to Val-d'Or. We made some board change in the last few months. I was appointed myself CEO, permanent CEO in November. We released the resource in June. So now we're working towards the PEA, and after the PEA, we're going to go for the feasibility while we continue the expansion drilling on our 3 assets. So to summarize, we're in Quebec. We've got 3 million ounces, very solid, supported by 2 independent firms. We have a mill that is 100% owned by us. And, you know, we're continuing to drill. So there will be drill results throughout the months, the next few weeks, as we have assay back. And the PA is going to be in Q4 2021. So on this, I'll open the mic for questions.
Thank you, Pascal. Great presentation. Let's start with Michael Potter, please. Mike, questions today?
Hi, Pascal. Great talk. I have a couple of questions. You mentioned a bulk sample being taken at Moroy. Do you have bulk samples at the other deposits as well? And if so, how did they reconcile?
The Gladiator is going to take some time because we don't have access to underground yet, but it will be in the plan. The bulk sample at Barry underground, we're going to do that after the PEA, not before the PEA. Right now, we're going to continue to expand the resource in the summer 2021 for the Barry deposit. The bulk sample for Barry, it will be done before production, of course, but not before the PEA.
Okay, and you said you've done a bulk sample at Moroy?
That's right. Correct? Yeah, we completed that in the fall 2020, and we first of all, we validated the geology model from 2019. We confirmed the continuity, and we got 9% more ounces that was estimated for the same area.
Okay, that last figure is the one I was looking for.
The 9%.
And the second, yeah, have you any streaming or royalty agreements on the properties?
We used to. Metanor Resources between 2010 and 2018 had a streaming agreement with Sandstorm Gold. The stream was converted into a royalty on Moroy and Barry deposit. So the royalty can be bought down for $2 million each, down to 1.8%. And but that stream and royalty with Sandstorm is not associated with Gladiator.
Okay, fine. That's what I've got for today. Thanks a lot.
Thank you, Michael. Thanks for being on the call, Michael, as always. Roger Fitzpatrick. Roger, questions today?
Nothing more than it was a great presentation, and I'm going to follow the stock very closely, but I don't have any questions. Thank you, sir.
Thanks, Roger. We'll turn to Howie Flinker.
Yeah, Howie chatted in his question. I'm not sure he has audio.
Oh, no, I do.
There you are. Howie, go ahead.
Bonjour, Pascal. I have a few questions. How much would it cost to expand the capacity of the mill from 400 to 800 to 2,400 metric tons a day?
To bring it up from 400 to 800, that was done in 2009.
Yeah.
And I believe I wasn't there back then, but if I recall the numbers, it wasn't significant because all they did is they had it a run mill. So I think it was like maybe 3 or 4 million.
No.
When we converted the mill from Merrill-Crowe to CIP, I was there. I was the general manager of the Bachelor mine then. And it cost us $4 million to convert the mill, the process technology. The mill expansion from 800 to 2,400 will encompass, of course, a SAG mill, some secondary grinding, but we're looking also at using the existing rod mill and ball mill for that. So it's in the work. You know, the numbers are not finalized, but
Okay.
You're looking at less than $100 million.
How much of your ore is sulfide and how much is oxide?
They're all associated with sulfur, so with pyrite.
Okay. I may have some ideas for you, but I've got to track down this engineering firm that seems to be able to do that without a roaster or autoclave.
They're associated with pyrite, but they're not in the pyrite. So we don't need to, the cyanide, like the cyanide process, the leaching process works very well. We did testing already. We confirmed that we get over 93% recovery just with the straight cyanide. So we don't need autoclave or we don't need to roast the rock.
How much cash you have? You said you have enough, but how much is that?
We have over 10 million today.
Canadian.
Yeah, over 10 million Canadian today.
Okay, and
and no debt.
Yeah, I know. Finally, do you have any feedback from the government of Quebec as to when you'll get the permit to go from 400 metric tons a day to 800? Or is that just a bureaucratic guess?
No, we already have the permit for 800. What we're
You only have 400.
yeah, 2,400.
No, I thought you only had 400, not 800.
Yeah, no, we're already at we're already at 800 and 2,400. Just analysis process. So I doubt, like every, like a lot of business, a lot of people take vacation during July, August. So
Yeah.
I'll be surprised to have the decree July or August, but I'm very hopeful this fall. And then we'll provide detailed design to the ministry. But
And Legault wants jobs, so even with COVID, he will ask the mining ministry to speed it up if they can.
you got to be careful with the ministry people. They have things, they have tables, they have criteria they have to assess, and they're not going to budge on that. So but in the meantime, that's why we began the permitting process so early. So
Sure.
It's not the critical path for us. The critical path for us is PEA and feasibility. I get the mill permit this fall. I'm not going to start building the mill right away. I want to make sure that the PEA is completed and the feasibility. You got to demonstrate to the market that you got reserve before you start producing.
And did you say, Pascal, that your guess for CapEx would be less than 100 million Canadian?
That's for the mill itself. Then you got mine design, like the excavation underground. That's
I see.
Yeah, that's the less than 100 million. It's the mill alone.
Oh, and excavation's got to be another 50 or 75 million.
Maybe, well, I don't think that much, but you were in the range, you and I. So you're looking at overall, with contingency, I'm estimating it's probably going to be less than 200 million with contingency, everything, So, but we'll let the PEA, we'll let the engineers work on it. You and I can have all these forward-looking statements, but the PEA will give the real number.
And they're just guesses, and to repeat, those are Canadian numbers, right?
Yeah.
Okay. C'est tout. Merci, Pascal.
My pleasure.
Thank you, Howie. We'll turn to Jeff Messeri. Jeff, just got to get Jeff unmuted, and then we're in. Oh, there you are, Jeff.
Okay. Hi, Pascal. Great presentation. Thank you.
My pleasure.
Some of my questions have already been answered, but I still have some more. First of all, what is your monthly burn right now?
It's about 2.2. Depends on the drill performance. My largest cost is diamond drilling.
Yes.
So it depends on the drill, if there was any move during the month. But that's the range where I don't like saying burning. I don't burn money. I invest money. But you get what I mean. Between 2.2 million.
Okay. Can you, once you're in production, can you operate 12 months of the year, or do you have a period where you cannot?
No, the mill, the underground can operate probably between 355 and 360 days a year, if it's well designed. The trucking will be, you need to take a 3-week break for during the meltdown, because you're going to destroy your road, you're going to destroy your truck. So you're going to take 3-week pause. So 345 days a year you can truck material, but all you got to do is truck a little bit more in April, and then so you don't shut down the mill, right, during the month of May. But the trucking, the 3 weeks in May, there won't be any trucking. And the process itself, you don't want to shut down the mill for 3 weeks. So what we do is we plan shut down throughout the course of the year. So typically 345 to 350 days a year is probably your mill operating rate.
Okay, is anything going through the mill right now or not? Are you tolling anything or not? Not yet.
No, the mill is on care maintenance. We processed the material this fall from the Moroy deposit, so the mill is functional. But we turn it. I say turn it off, but it's more complicated than that. But we put it back on care and maintenance this winter, and we sold the gold inventory that was in the mill.
Does the plan now stretch down to below you, or are you not in the plan now?
No, we're part of the Plan Nord.
You are.
For Gladiator, you're talking about the Plan Nord from the Quebec government?
Yes.
Yeah, Gladiator and Moroy are part of Plan Nord, and Barry is just south of the Plan Nord.
I thought it would be somewhere near there. Yes. Okay.
Yeah, Barry deposit is 500 meters south of the Plan Nord.
Okay. Well, thank you very much.
My pleasure.
Thank you, Jeff. We'll turn to Mike Ward.
Hello. Excuse me. My questions are around production targets. If you can give us an idea some year forward, 23, 25, 3 years forward or 5 years forward, kind of what's your targeted expected annual gold production rate?
Good question. That was the topic of our meeting this week with the mine engineers. We're looking at that right now. It's going to rapidly go up to 2,400. Now, with all these deposits feeding the mill, eventually we're going to have to look at beyond 2,400 tons a day. So right now, the permit that we requested is 2,400. So I'm not going to go to the ministry tomorrow morning and say 3,000 because I'm going to have to start over that 3-year process. So let's get 2,400 secured. Let's ramp up production at 2,400. And then, like in 2027 or 2028, maybe we're going to have to expand again. But right now it's going to, I would say 2 years to ramp up to 2,400 tons a day. Especially if you start looking at the Barry pit. So now it's still early to any design because you want to maintain your access to Barry underground. So you cannot have an open pit interfering with underground development and mining, and then you displace 5-6 gram material with 2 gram material. So, but there's pit design that needs to be done. That's what we're going to do this summer. That could be done in parallel as you do your mining underground. You leave a crown pillar that you keep for the end of life of mine. And then so you can do Barry open pit as well as Barry underground at the same time. But that's being looked at right now. It's being designed. So it's questions that we're asking ourselves and that we're working on. But definitely if you have open pit material, it's very easy to fill the mill.
Okay, thank you.
My pleasure.
Thank you, Michael. I will turn to Victor Zhao. Victor. Question today, Mr. Zhao.
Yeah, hello. How many rock process place you have? I mean the core process, core handling, core shack. How many core shack you use? You because you have a few drill site.
Yeah.
How many core shacks? Is that what you're asking, Victor?
Yes.
How many core shacks? That's a question we haven't heard before.
We have a core shack at each project. So they're independent from each other. Okay. We have chief geologists at each project supervising the core shack, and we have a core shack at Barry, and we keep the core at Barry, and we have a core shack at Gladiator and at Moroy. They're all kept separate.
So okay, thank you.
You're
Thank you,
welcome.
Victor. We'll turn to Henry Everso. Henry, good to have you on the call. Do you have a question today for Pascal?
No, thanks, but I appreciate the presentation. Thank you.
Thanks so much for being on the call. We'll turn to Chesley Morton.
Okay. First of all, great presentation. My questions have to do with money and markets. First of all, you mentioned you have 10 million in the bank,
Yeah.
and you're pretty aggressively investing rather than burning. So, are you going to be doing financing before the end of the year?
That for sure, 2022 is not funded. So, yeah, we're going to do financing before year end. I don't want to wait till we're in the last minute. So, and to advance these assets, two things needs to happen. Either you finance yourself your next year, or you find a strategic partner, or there's M&A. But there's three ways for us to progress. And but one thing for sure, you need to advance the asset. So you drill, you do the resource, you do the PEA, and yeah, there will be another capital and equity raise before year end.
And would that take the form of a flow through, or are you pretty much against that?
No, the flow through is especially where we are. Our projects are eligible to flow through expenditure. So, but we're open for both. But when you issue flow through shares, you issue it at a premium. So, so it's less dilutive for the shareholders. So that's the advantage. And in exchange, the shareholders gets the tax credit.
Absolutely. With regard to, and that takes care of the money part, but with regard to the markets, you had a slide, you showed it with regard to your institutional investors, but with regard to retail, how does that shake out? Are most of your retail investors in Canada, or is it split pretty evenly between that and the States?
I would have to find out. I can find that out, and if David could get your email address, I don't have that answer.
Oh, okay, that's fine. It's yeah, and David knows my email, but I'd be happy to send it along.
Yeah, we'll
well,
get it to you, Jess.
yeah, great. Something that you probably do have a better feel for is trading, and you're on the TSX Venture. Is that the primary market, or do you get a pretty good amount of daily volume on the U.S. side?
I think the majority of our volume is from the Canadian side, I would say.
Yeah, and that's usually the case.
Yeah.
But some of the junior Canadian mining companies that that we deal with on a regular basis have listings in the gray sheets and so forth, which are problematic for some U.S. investors and some of the wirehouses and so forth.
Yeah.
As part of your overall plan, I know you've got a lot of fish to fry, but would an uplisting in the U.S. be somewhere in your list of priorities?
We actually did look at it to be listed on the New York Stock Exchange. The thing with the New York Stock Exchange and the type of the category of company, a public company we need to be over $2. So right now it's in the cards. We know what it takes, but I'm not going to do 5-to-1 just to, consolidation just to qualify for the New York Stock Exchange, So let's get the capitalization up, let's get the share price up, and then we can resume the discussion with our friends in New York.
Yeah, sometimes these things work out with just good drill results. So I'll keep my fingers crossed for you on that.
Yeah.
Great presentation. Thank you.
My pleasure.
Chesley, as always, thanks for all your questions. Really add to the call. So thanks. Well, let's turn to James Wood from Atlanta.
Dr. Wood, you'll have to unmute yourself if you can.
Yes, I think I'm unmuted now.
We can hear you for sure.
Good. Yes, two questions. Assuming within the next 2 years that you are able to increase your mill rate from 800 to 2,400 tons per day, this is sort of like a previous question, but being more specific, assuming 2,400 tons per day, what would your expected production rate be? Say a steady state 2,400 tons per day for a year, given the grades that you have. What would be your production level?
Well, they are between 120 and 140,000 ounces a year.
That high on a 2,400 ton per day mill?
Yeah, that would be in that range. See if you take 3 grams times 24 times 355 days divided by 31.1. We're looking at 137,000.
Well, that's quite impressive. That's good. And then my second question is in the Bonterra financials, it states that the care and maintenance of the mine is costing $1 million a year. And at what point would that cost be retired, or would it gradually be reduced over time, or do you have to reclaim, do reclamation on that mine to put it to rest to get rid of that $1 million a year cost?
Okay, your question's in twofold. So right now it's a care and maintenance cost because we're not producing at Moroy. Once Moroy begin production, then it's no longer a care and maintenance cost because you're keeping the mine dry for mining activities, not just for care and maintenance. So that $1 million would be part of your operating costs during production at Moroy. Once Moroy is depleted, if there's no other deposit within a kilometer around the bachelor shaft, well, you turn off, of course, you don't just turn off the power, you dismantle the pumps, you sell them, and then your cost becomes zero. The reclamation cost for the site, for the tilling facility, is already in our financial statement as a liability, and we have a bond covering that right now.
Oh, excellent. So that seems to be taken care of. That's great. Thank you very much.
My pleasure.
Thank you, James. We'll turn over to Scott. He's got a couple of questions that come from our audience.
Yeah, first I had a follow-up question from Mr. Potter. Is there any potential to heap leach material that is too low grade to send to the mill?
We did some numbers on heap leaching over at the Barry deposit. They would need additional testing done, but it showed potential. Right now the grinding is the issue, and heap leaching in Quebec hasn't been done and approved by the ministry yet. So we would have to go through some unknowns, but I don't see any reason why not, other than the fact that your recovery is not as good as processing material in the mill. and at $2,000 an ounce, to me, that these veins, these deposits are high grade. So I think one thing we could look at, and actually we are looking at, is for the low grade material, is it would be to do ore sorting, visual and optical ore sorter. The technology evolved a lot in the last 10 years. You start seeing companies releasing test results. We're in the middle of that right now with Laval University and CAREM. But I doubt very much there'll be in the PEA because we're still in the early stage of the research. But to me, it's an avenue that should be looked at for low grades, material that you got from, let's say, you develop towards an high grade zone, you develop through the low grade, you keep the low grade stockpile. Well, eventually that ore sorting technique could be used to increase the grade and process it traditionally in the mill.
All right, thank you very much. Another follow-up question from Mr. Flinker. How much of the Canadian 100 million was spent by prior owners? How much of the Canadian $100 million was spent by prior owners? And if that doesn't make sense, I can just unmute Mr. Flinker. Howie, can you hear us?
Yeah, I can hear. Pascal, didn't you say that 100 million had been spent on the mine so far?
To build the mill, you mean?
No, hasn't 100 million already been expended by Bonterra and previous owners together?
Invested, yeah, the diamond drilling.
Yeah. So how much was yours and how much was previous owners?
Us, since I've been CEO, about 20.
20. And the previous management?
Over 100.
Oh, I see. I got you. So between the two of you, maybe even 125.
And if you go back 15 years, probably more than that. Because
more than that.
But the mill was built, the tilling was built, so there's asset out there. You got 3 million ounces of resource, and that 3 million ounces wasn't discovered with just 20,000 meter drilling.
No. But my point is, you only spent 20 or 25 million of the total. And the other guys spent the money, and it's gone from them, right?
Well, it was invested in diamond drilling, and
and 15 years ago they got little for it until now.
Yeah, now like what's been done in the past, I cannot change it. So myself.
No, I mean that's coming essentially free, because your whole market value is what, 175 million Canadian, 140 million Canadian, something like that.
Yeah, that's correct. And we have 2 million ounces of resource now.
Exactly.
Yeah.
That was my point. Okay, merci.
My pleasure.
Thank you, Howie. Back to questions from the audience. I have one here that I believe, Pascal, you've already answered, but I'm just going to go ahead and ask it in case there's some nuance. Is there any possibility to mine out Moroy and Bachelor to fund company activities to minimize dilution?
That will be the goal. Bachelor itself is very small, so Bachelor will be like a sweetener to mining activities from Moroy. You don't hire a full crew of operators. First of all, if you mine Bachelor alone, try to convince people to quit their existing job to come work for you for 3 months. No one's going to quit their job for you. So you gotta tie Bachelor with a larger plant. Moroy, there's a long lead life of mine at Moroy. it needs a feasibility study completed in order to obtain the mining lease. In Quebec, you obtain your environmental permit from the Ministry of Environment. The mining lease is obtained from the Ministry of Natural Resources. And to obtain the mining lease, you got to submit a feasibility study to the Ministry of Natural Resources. So Moroy will be going into production after we complete the feasibility. And then, of course, once you start mining Moroy, then you bring in Bachelor at the same time. But until then, we're gonna focus on Moroy to do the feasibility.
Understood, thank you. Next question comes from someone who couldn't attend and wrote in. Would you ever target silver? There are a lot of historic hits around Cogneus and Bachelor area, close proximity to mill, decent grades. I know gold is the focus, just seems like an easy win for the proximity.
Yeah, well, silver in Canadian dollars is, we're still talking less than $50 an ounce. So you need pretty high grade silver deposit. Of course, if we come across silver vein, yeah, we'll look at it. But right now, our focus is on gold, and if we happen to intercept zinc, or because we're following up on geophysic anomaly, the geophysic anomaly doesn't say it's silver or gold. It says there's potential for mineralization. So we're going to follow up on geophysic target, and that's what we're doing right now. That's how we discovered the Mareville zone. Mareville, no zinc, no silver, it's all gold, which happens to be over $2,000 an ounce. So I don't mind that.
Good point. Okay, and final question from the audience is, can you discuss why Eric Sprott is no longer on the insider investor list?
Well, maybe because he sold his position.
Makes sense.
Mm-hmm.
That's all we have from the audience. I did want to clarify one thing. Mr. Mosseri chatted in to verify if you were on the OTCQX, and I wanted to just verify that that is in fact true.
Yeah, we are listed on the OTCQX under, well, it's at the bottom of the page, BONXF.
Excellent.
Which we need to make the distinction. The gray sheets, when they just give you the OTCF5 symbol, that you don't even ask to apply for, that's nowhere near the same. The QX and the QB, as everybody knows, is the upgrade. So it's a great trading symbol to have right now in the interim until you get to the New York Stock Exchange. So this is a company that's easily set up for trading in the US. Pascal's done all the hard work. Are we finished? We're finished with questions.
We are, in fact. If anybody has any other questions, please email them to us. We'll be sure to get you answers directly from management. And I did want to point out, you can follow our 6-Minute CEOs with Bonterra Resources on our YouTube channel and subscribe for any updates from Pascal and their team.
Thank you, Scott. I want to thank everyone today for the participation, the great questions. I want to thank Pascal for presenting. And I'm going to turn it over to you, Pascal, for closing remarks.
Well, again, David, thanks everyone, Scott, David, for inviting me to present at OlM. It's a great event, great questions. I love this format. So yeah, you can invite me anytime you want. I'll be delighted to update your attendant, your investors. I like the format. And to close, keep in mind 3 million ounces. Confirmed by 2 independent firms with very strict guidelines from the CIM. We're continuing to expand the drilling, 10,000 meter per month, and we're doing the PEA this fall. So stay tuned. Thank you.
Very, very exciting times. Thank you, everyone. I wish you a very pleasant evening. Thanks again. Bye-bye.
Bye.